Thanks, everybody. There we go. So I was saying some stuff. It is Monday, March 14th, 1 p.m. Eastern. We had the time change here in the US, and that does impact when my daily candles close. It used to be 7 p.m. Eastern. Now it's 8 p.m. Eastern. And we can anticipate some significant volatility the second half of this week as we've got the FOMC Wednesday at 2 p.m. Eastern. And then the end of the week, we've got quad witching, which in the stock market world is just a high concentration of a bunch of options all expiring on the same day. So we know volume and volatility are coming the second half of this week. And as we prepare for it, we have a bit of a shifting environment going on right now. And just to speak bigger picture on the markets and how they've been relating to each other, we of course know Bitcoin has been very correlated to the broader market. And I can see now my yoga ball in the background. We'll leave that there. That's a reminder for being aware of your body and health and making sure you're moving around and not sitting in the same stagnant spot forever. So we've got the relationship between the broader market and crypto and commodities has been shifting a bit. So all last week to start, commodities and the stock market were inverse to each other. So that means gold and oil were going up, stock market was dumping. When the stock market would bounce, gold and oil would pull back a little bit. And that correlation started to shift. And really the last 2 or 3 trading days, it's become clear to me that there is positioning going on for the FOMC. And a big change is on today's trading, we have commodities weak, commodity stocks are weak, and the market is weak. So everything's going down. And we have the tech sector and QQQ leading the way. So let's look at some charts now. And we can see SPY is red, heading down towards a couple supports, not much there. QQQ is leading the way down. It's at our fear lows right now, 318.26. But you look at other sectors, the healthcare sector, or this is the financial sector, is a solid green day today, up 1.7%. We've got the healthcare sector is up 1%. So all last week, we were seeing these sectors generally doing the same thing. But now there's a very drastic difference between them as we're seeing a sell-off in tech and buying in the financial sector and more value stock sectors. So it's all going to boil down to the FOMC. What are we getting a rate hike? How significant a rate hike? What does the language look like into the future? Are we going ahead as planned with, I think it was what, six hikes this year? Or are we going to see dovish talking about the future because of the Ukraine situation where they're going to say, all right, we're going to dial it back a little bit. And then maybe the market perceives that as bullish. Either way, volatility is incoming. And we have to keep in mind that the reaction that we see, it's only 2 hours of trading after the FOMC on Wednesday. And oftentimes we see a reaction, but then it completely reverses by the following day after the market has had proper time to digest it, all the information that we get. But the bottom line is the bears are in complete control of the broader market and most notably the tech sector right now. We also saw a little bit of a break in the correlation between Bitcoin and the broader market. And just the difference was we saw a pullback on Bitcoin when stock futures opened, even though the futures were bouncing. They bounced a couple, it wasn't a big bounce, but it was going up. We were green when futures opened and red in Bitcoin. And then Bitcoin had a big time bounce, whether it was, Musk put out a tweet that probably had some impact on things there. But breaking correlations is essentially what's going on right now to start this week. And again, it's just going to be, can the bulls set a daily higher low? We're watching this tightening range on Bitcoin. Can the bulls set a daily higher low compared to 37.1 for an equilibrium to continue forming until FOMC Wednesday? So the burden of proof is on the bulls. I mean, just the fact that we're green right now is a win because I'm just watching QQQ free fall. And as long as QQQ is free falling and Bitcoin is not, that's a good sign. Bitcoin's still holding the low of when the stock market opened while QQQ and SPY are not. But the bulls have to prove it. Bitcoin needs a 4-hour trend change for a daily higher low to be established, which means we must hold our low of 47.5 or 37.5. So again, we held the daily support, but we must confirm the 4-hour trend change. So the ideal scenario for the bulls is hold 38.6, make that a little bull flag higher low, and then break 39.3 to confirm the 4-hour trend change and set the daily higher low. If bulls are able to pull that off, we zoom out and we scout a daily lower high under 42.6 thousand as the most likely scenario before the FOMC. Now, I can't possibly predict what reaction we're going to see to the FOMC, and I know to wait and react to the reaction as opposed to trying to position for that reaction, because I learned long ago that that's just a gambling coin flip. And I don't like gambling coin flips. I want probabilities in my favor on every trade that I take. So I know that I have no idea how the markets are going to react Wednesday. And if I were to kid myself and think that I have an edge determining what the direction of the market will be Thursday and Friday, I'm lying to myself. So I wait and I will react. Aggressive bulls are playing off of 37.1, but otherwise we need to exhibit patience. And I've been talking about trading, swing trading less when we are in equilibriums. And again, one style, I'm going to make a video specific to this talking about when to pump the brakes, when to go aggressive, but we want to wait for tightening ranges to break to go aggressive. The longer and more drawn out, the better. And when we see equilibriums forming, we want to trade less and less as they get tighter and tighter. Because again, if the volatility is shrinking and we have 10% in a weekly range, and then we have 5% the next week, that slice of the pie that I can get in terms of gains is shrinking as well. If there's a 10% pie, I've got a lot of opportunity to get my piece of that 10% volatility. If it's then a 3% pie, my chance to get that piece that I want is much, much smaller. So patience is going to be the theme of the week for me. And right in line with that, we've got another free ebook to check out, how to practice patience in trading, some examples and things like that. I'll drop the link in the chat room right now, and it'll be a link in the comments, or I should say the description in the comments of this video once we're complete here. But going to talk about patience a lot this week, and I've got a video about patience I'll repost tomorrow as well. So I'm patient, waiting for clarity on the weekly equilibrium, and knowing that the FOMC may be a catalyst to break the tightening daily range, but it doesn't have to be, because it is still a very wide range. Let's say markets react bullish and we go up 5%, still possible that we set a lower high. So we'll be watching very closely where are we positioned heading into FOMC, and a simple statement would be if the bulls do not confirm a 4-hour trend change here, and if we do not set a daily high or low, the bears will have the advantage into the FOMC. The reason being, it's much easier for the bears to take out these support levels than for the bulls to take out resistance if we don't get back to the midway point of this range before the FOMC reaction takes place. So that is where I stand heading into the FOMC. I'll look at the comments in the YouTube videos here, or the YouTube chat shortly after I just run through the coins that I want to look at. So the dominance chart we know has been strong, and we're in a weekly stair-step pattern, which means we're setting a higher low every single week. We're now on week number 9 of that pattern being intact. And it's a daily equilibrium here as well. So if we were going to see, if I'm an altcoin bull, I really want to see this pattern break bear, because I know that altcoins have been underperforming Bitcoin. Aside from a few, they've been underperforming for a couple months at this point. So if this daily equilibrium breaks bear, then weekly consolidation is underway, and we look for a continued long, drawn-out tightening range here. We'll be talking about that plenty over the next month or two. But for now, we know the bulls have complete control, which means the Bitcoin dominant bulls are confident. And it's a much more tricky altcoin environment if you're looking bullish. It's much easier if you're looking bearish, because you've got momentum. You've got the wind at your back if you're looking bearish, because most altcoins are dropping harder than Bitcoin and not going up as much as Bitcoin. And if you're looking bullish in this environment, the wind is in your face. There's only maybe 5 coins out there that are showing relative strength comparative to Bitcoin. So keep a close eye on this dominance chart. Let's see if we remain tight into the FOMC or if we get a break before it. Wouldn't be surprised if we remain tight. Ethereum. So Ethereum's trying for a daily higher low as well compared to 24.45. We need the 4-hour trend change as well. We're not forming a 4-hour higher low. So the burden of proof is on the bulls, but they're not showing us much at this point. And when I look at this retracement, I want to know, can we set up this trend change? How much of this move are we giving back? We've already given back about 60%. So it's not a possible bull flag. And it just means the bulls have more work to do if they're going to confirm this trend change. Have to confirm the trend change for a daily higher low to be set. If we get it, we then look for a lower high, anything under 27.74. So low, lower high, trying for a higher low, but it has not been confirmed yet because we have not set up a 4-hour trend change back to the bulls. The ETH BTC chart is really struggling at daily EMA 12 resistance the last couple weeks. We did break weekly support here, but it's right now a bear break with a lack of follow through. So you can call that a double bottom, but we don't have any confidence that double bottom can hold unless we confirm a daily trend change. If we do, we'll call it a bear break with zero follow through into a weekly bounce. But again, we need to see that dominance chart on Bitcoin lose the daily uptrend, start weekly consolidation if we're going to expect ETH BTC to get a weekly bounce going. So again, if I'm looking bearish on the crypto space, I'm choosing Ethereum over Bitcoin every time as long as ETH BTC is still this weak. And again, I know it's a tricky concept. It took me a long time to just wrap my head around it. If I'm looking bullish in the crypto space, I want to find an altcoin that is in a BTC pairing uptrend. Sweetie Pants making an appearance. If I'm bearish the crypto space, I want to find coins that are in BTC pairing downtrends. And there's a ton of them out there. If you go down the list, we'll do so real quick. Daily time frame, OMG BTC. Ooh, they had a nice pop, but very short-lived. Again, just long, drawn out. Theta BTC is an equilibrium trying to form here, but it's still overall weak. Neo BTC dropping back down to fresh lows. Sushi's been weak for a while. Sushi just a slow bleed down. If I'm bearish, this is exactly what I want to see. Just a slow bleed on the BTC pairing. Constant weakness comparative to Bitcoin. RSI doesn't matter. It's just in the depths. We know that these downtrends like this do break fast and hard, like OMG showed us. It was the same long, drawn out, fast, hard bull break. So stop loss is obviously essential, but there's a ton of downside weakness the majority of the time before those pops happen. ADA has been a great one. And the simple statement is ADA is a bearish play comparative to Bitcoin as long as daily EMA 12 is resistance. Luna has been one of our standout bulls. Luna daily higher low is set now at 85.34, and that is now the most important daily support level here. And we have to be cautious because we have to be cautious of a top being set into weekly consolidation, because we have to keep in mind in a weak environment, we have already gone 120% in the last month. So we're not going to be greedy. We know that going 120% in this crypto market environment is very impressive, but we have to be cautious knowing that it's not sustainable. At some point, weekly consolidation is coming. So if we were going to see a top being set here, it would come in the form of a lower high compared to the all-time high, 104.83, and a confirmed daily downtrend. That's when we say, okay, market environment shifting for Luna, and it is weaker. And this is essentially a head and shoulders setup where you just go from an uptrend with a higher low, higher high, higher low, lower high, lower low. All a head and shoulders is an uptrend changing to a downtrend. And we did hit an all-time high, but with no follow through, which is another reason, just another little point in favor of being cautious as a bull with this current setup on Luna. So then I look to the BTC pairing and say, are there any clues for me that our daily lower high is being set? And on Luna BTC, no, it's doing the same thing as the US dollar pairing. It's been a bit stronger. Look at this daily consolidation back here comparative to the US dollar pairing, much weaker. So it's been remaining stronger, which is a good sign for the bulls, but keep an eye on it. If Luna BTC loses the 4-hour higher lows before Luna USD does, it'll be the first little red flag of what I call the spotlight fading. Right now, Luna's in the spotlight because it's doing the exact same thing as its BTC pairing, and it's staying very strong. And as soon as the BTC pairing starts to diverge a little bit and starts to show a little bit of relative weakness, I call it the spotlight fading, and that's what we look for generally as profit-taking signals, but it's what aggressive bears look for as well. because we say, okay, starting to change a little bit. We just want to recognize a shift in market environment. And that's another video that I'm going to put out down the line. I've been working on content creation and a lot of brainstorming, but determining and being able to recognize shifts in market environments is critical to knowing when to go aggressive and when to go conservative with our trading. And one example would be recognizing shifts in BTC pairings that indicate, I'm distracted by a turkey. Recognizing shifts in BTC pairings that indicate a shift in the relationship between the BTC pairing and the US dollar pairing. So there's no sign of it on Luna, but I'm watching for it over the next 24, 48 hours. Sol, watching some falling wedges. So this is a US dollar pairing. And oftentimes falling wedges, I keep an eye on them and they break bear and I never do anything. And that's perfectly fine. It's just keeping an eye on something to see if it shapes up for an entry opportunity. So if I were watching Sol, I would have volume alerts set, whether it's through Trader Pro or through TradingView, and just want to see when there's a spike in volume, because we know that a falling wedge isn't going to break without a big spike in volume. And I could make a simple statement and say, if we do not break 89.92, bulls don't prove anything. But when I see a US dollar pairing and a BTC pairing in a falling wedge, knowing that a longer term time frame favors a higher low. We know we're scouting a monthly higher low in both pairings. Now that monthly higher low can form here, or it could form another 20% to the downside. So we're not going to get too aggressive looking for that monthly higher low. But when both pairings are in that falling wedge setup, it just has me paying a little bit extra attention. So again, I'm not doing anything bullish related to Sol. It's just something that, okay, I'm going to keep an eye on it and check in every day now from here to just see if the bulls can get my interest by showing me something. And if this BTC pairing just continues its daily downtrend, it won't show me anything and I won't do anything with it. And I can't tell you how much of my technical analysis is not utilized. There's two ways to look at it. Not utilized, but definitely utilized because it's practice. I am constantly doing technical analysis and practicing. I'm watching setups play out that I'm not a part of, but I put names on a chart. Okay, I'm going to check in on Sol every day for the rest of this week. And if I don't end up trading it, it'll just be good observation and it'll just go into the memory banks as another potential falling wedge that either successfully breaks bull or fades down to lower lows and doesn't do a thing. So Bitcoin 4-hour trend change or bears keep confident is where we stand right now. And even if bears are comfortable because even if we change the 4-hour trend, it's just a daily high or low, and bears are just going to be looking for a lower high from there. So now I'm reading the chat room. And we'll look at LTC. So again, LTC, I pull up the LTC BTC chart and I look at the weekly time frame and know that I'm just looking for a weekly lower high because every single bounce has given us a weekly lower high for the last many, many months. We are in a daily uptrend, so that's worth noting, but we must keep that daily uptrend if anything's going to stand out as different. And knowing that that weekly lower high is all the way up at 32.46 here, we know that a weekly lower high is the most likely scenario because we could even keep this daily uptrend for another 2 weeks and still be under that level. So I will be interested in Litecoin when the weekly time frame does something different than setting a lower high every single bounce. And again, I was highlighting, this is another one where I was just watching it and highlighting this falling wedge and watching very closely, and it broke bear. So I just stopped watching it and I saved that extra 60 seconds a day. But you better believe that had it broken bull, I would have been all over that, jumping in for some nice gains. So that's what it's about, watching the setups, stalking the trade, stalking, S-T-A-L-K-I-N-G, the trade, and it either comes to you and gives you the setup you want, or you leave it alone and don't trade it. Awesome, Chris. Glad the correlations with the broader market has been helpful. That was definitely an aspect missing from crypto technical analysis. When we started Crypto Technical Analysis in 2017, there were not many players in the game, and the YouTube algos loved us for that. We got big boosts. It was great. 15,000 views a video. But everybody piled in over the years. Now there's 150 million channels doing it, but they're missing that broader market aspect. And that just comes from being a stock trader. I'm a stock trader who trades crypto at my core, with all my experience on the stock side more significant than the crypto side. So that's what I bring to the table as far as, a lot of people are blinders on and looking at crypto, and yes, they're better at the DeFi projects and the fundamentals, but they're missing the bigger picture view of things, which is so important. The more we see correlations strengthen, and the bigger the market cap of Bitcoin and the more institutions that are involved, the more correlation we're going to continue seeing. And I don't see it as it's not a little short-term fad. I only see correlation strengthening unless something drastically changes, which it could. I mean, how many times have we seen some drastic changes in this space over the last bunch of years? Why did BCH never really recover? Keep it simple. I mean, there's no, secret answer. People aren't buying it. So, if I'm looking at what crypto do I want to buy, BCH has never crossed my mind once. And the market is likely in the same place. We're in a monthly, weekly, daily downtrend. And just keep it simple. There are more people selling than buying. There are more people shorting than longing. And that's that. KDA chart. What do I make of the massive spike? So I zoom in. I want the details. What happened there? All right, big time move on the hourly time frame. We shot up. We gave it back. My first inkling would be, okay, what's the news? And if there is no news, then it looks just like an orchestrated little mini short squeeze. But even then, it wasn't even a position. Oftentimes you'll see a little short squeeze where it's just bears in absolute complete control on every single time frame, and we're absolutely crushed. And bears get cocky, just like bulls get greedy and euphoria mode at all-time highs. That happens to bears when they have complete control as well. But I look at this chart and don't see a setup where bears were extremely cocky with the recent price action. We were just tightening up. So I don't have an answer. If news is not the answer, definitely a significant amount of volume and definitely a significant amount of follow through initially. But once we topped out and did not, we confirmed a 5-minute trend change, a 15-minute trend change. We never confirmed an hourly trend change. Just big pop and give it back. Need to change trends on all time frames. When you're going counter momentum, got to change trends on all time frames if you're going to have confidence in follow through. So great, you change the 5-minute, you change the 15-minute, but you got to change the hourly, and then you got to change the 4-hour. It's step by step to prove it one time frame at a time. And if you only prove it on a couple time frames, you're not proving it bigger picture. It's definitely about being sensational on YouTube right now. Watching the YouTube space change has been depressing. Really? I gotta make thumbnails that look like that? I gotta make video titles that do that? One other thing we need to be aware of, got to be keeping an eye of the European, I haven't even gone down the rabbit hole of fully understanding the fundamentals around it, but potential European ban on mining, and which would obviously negatively impact proof of work, and something to keep an eye on. But one thing that I've learned with anything to do with legality changes, and I've been trading the cannabis space for a long time, which is all about legal changes in Congress and all that, is things are very, very, very slow. So yes, we can see headline reactions and things like that, but before anything's actually implemented, I would assume that it's the same in the EU, where it's a long, slow road. Ebooks that Lamont created. Good question. I will post. You can email in, Ty. Just email support@chartguys.com. And we'll send those all out for you. There's a lot more coming. We got book reviews coming. A lot of little ebooks. Dot. Bam, failed. All right, thank you. So yeah, I mean, for things really got to get far along for them to actually have a chance of being implemented. I mean, the fact that cannabis still is listed as Schedule 1 with no medicinal value in the US with the amount of states that have it as medical is just absurd. That's all you need to know about government efficiency. So .BTC, Dot has been one of the stronger names. Daily trend change confirmed, but a rejection from weekly resistance. So that is the most important resistance level right now. Bulls must get over that double top. US dollar pairing, it's an equilibrium similar to Bitcoin. The difference is stronger. And this, I don't see a ton of clarity on this daily chart when I look at it. So I zoom in, or zoom out, I should say. I condense it to the 2-day time frame, and it's smoother, where I just look at a low, high, higher, low, lower high at 1875, and bulls must hold $16 for another higher low and continued tightening range. So I like the 2-day time frame for DOT. And if this is going to break bull on the US dollar pairing, that BTC pairing needs to break the double top as well to get that big leg up of follow through. I'm not seeing Bitcoin front running the stock market much anymore. There were some nice little clear examples of it. But in this current, again, right now, the way that I see things is when you get correlations, they're nice and clear. I imagine it just like a current in the ocean. You got the Gulf Stream or whatever going up the coast. And when you see an event like the FOMC coming up and these correlations start shifting, it's almost like you just take a big stick and you're stirring up that current and it's swirling around. And we're waiting for things to settle down from that swirl to see how things play out. Another example is shaking up the snow globe, and we need to wait to see how things settle because there's definitely a shift in capital flow over the past couple of days, prepping for the FOMC reaction. Right? Today is the biggest difference between XLF strength and QQQ weakness that we've seen in at least a week, probably multiple weeks. This whole time, QQQ is just absolute bear mode. 5-minute downtrend, 5-minute bear flags. And Bitcoin on the 5-minute time frame is being impacted. It's not as bearish, but it's not immune to it. All right, 2 more minutes. Beginner blockchain book. I do not have one. I've only ever gone on the surface of blockchain, going through YouTube videos and things like that. Have not gone in depth. So again, whenever I'm looking at an altcoin, I know what Bitcoin's doing. So I don't need to look at the US dollar pairing. I look at the BTC pairing. I can say, okay, we have been weaker than BTC for the last month plus. We just set another daily lower high at 78.69. So I can say if we do not break 78.69, we are going to remain weaker than Bitcoin. And the double bottom is worth paying attention to in the 73s. And this is the only range that I care about until one of these 2 levels break. And the burden is on the bulls to break resistance to prove to me, hey, I should be paying attention to XTZ more than Bitcoin right now. But if that daily resistance remains, nope, I should be paying attention to Bitcoin more than XTZ unless I'm looking short. Thoughts on Tesla? It is dragged down with the market. We're not going to find a bottom on Tesla if we're not going to find a bottom in QQQ. It's definitely bullish comparative to QQQ. Tesla is well above its fear low of 700. QQQ is at its fear low. So we can say Tesla has a bullish correlation to QQQ, but again, it's not immune to QQQ weakness, and it is being dragged down. And the daily lower highs have been very, very clear. So if you want to be patient looking longer term, before you're even considering an entry, you're waiting for the daily lower highs to break. And that's just the first indication that something's different. Again, recognizing shifting market environments. If we set daily lower highs for 2 months, and we keep setting daily lower highs, it's the same market environment. If you set daily lower highs for 2 months and then you break those daily lower highs, okay, this is different. The market environment is changing. And look at QQQ on the weekly time frame. Was it the weekly that I want or the daily? We can go weekly. So weekly, we held EMA 26 1, 2, 3, 4 initially times, and then we lost it. And we can say this time it's different. And even the daily chart, daily's not a good example, but the weekly showed us, and it was also the confirmed weekly downtrend. It's easy in hindsight, but this is the first weekly confirmed downtrend on QQQ. It happened at 377, the first time since our CVID lows. So that was a change in the market environment, and we have seen significant bear follow through from that point. When it happened, we couldn't say, we're going to see a huge drop from here, but we could say things are different. This is the first win for the bears in almost 2 years. Definitely need to be paying attention. All right. Last question. When trading ETH short to midterm, BTC in the same way I would watch SPY when trading QQQ? Yes. Yeah, I'm always watching, when any altcoin that I'm trading, I'm watching Bitcoin and the correlations and the BTC pairing. And anytime I'm trading any stocks, I'm watching the ETF that it is correlating with. Correlation will change, in my opinion, when the Bitcoin dominance chart weekly range breaks. Everything's going to change about relationships. You want a changing market environment. When this equilibrium breaks on BTC dominance, we will enter a new market environment. I don't know what it will look like at this point, but I'm very confident in that statement. Do good things. I appreciate you all tuning in. Check out that free ebook. Let's drop the link one more time. And I will see you all in the near-term future. Where's my link? Oh, it took me a while to post. Link incoming. Thanks again.